Good morning, everyone. Jesse Webb, TradersPro. It's looking like the market is presenting the new trend here. We'll see how we get some continuation, some follow through. Futures are down again this morning. As far as some of our signal indicators, we did have buy-sell ratio that was kind of chopping around right here, a little bit indecisive, but started that bearish trend, kind of hiccuped right here, and then gave us a little bit more clarity here today. So definitely some bearish tones here in the market. We've got that buy-sell ratio back down to 0.37, so bears are in control here. Our longer-term direction alerts, we're still kind of softening. This up and down on this long-term trend is just kind of flattening and softening. So it has been kind of trending up right here lately, and I would anticipate it will probably just flounder around here and kind of gradually work its way back up. Looks like we're gonna move a little bit lower, possibly retest some lows here. Let's look at SPY. We talked yesterday about this support area right here, which looks like it was solidly broken yesterday, and we're getting a little less color here. We talked about those variation of color, and now we're looking at this is about to turn back to red, which is going to take it so that we would have all of this red. Indications of something like that potentially happening, a new shift in the downtrend. So we want to be aware of this currently. We could certainly see some volatility right here, but if futures gap lower and stay lower and we start to trend back down, we could retest some of these lows. So that's the bias that we're looking at here currently towards the bearish side, really across all major indices, SPY, Dow, and NASDAQ. And again, these shorter term trends here, we're seeing a little bit of that, still that same setup that we talked about yesterday. It's a little bit slower moving indicator, even though it is a shorter term indicator. It's still, it takes a few days for it to really kind of see the overall trend. But this is still that setup that we're looking for some bearishness in the market currently. Some of the ways to take advantage of a bearish trend, one thing here just that's really quick is on the muscle ETFs, you can see some of these leading ETFs that are moving. This will track inverse ETFs, leverage ETFs. So as you get those swings in the market, you're going to see some of these ETFs start to creep into these scans, like these right here. If you'll notice those, it says ultra short Russell 2000, ultra pro Russell 2000, small cap 2000, financial bear 3x. So some of these are going to start creeping in for those inverse ETFs if the market is turning. The way that looks on a chart is something like this. So you can see now that we've got this risk profile on an inverse ETF. So you can actually take advantage of a market that is dropping by being long an ultra short ETF. They're called inverse ETFs. It's a nice way to be able to hedge and profit in a downturn without having to be overly sophisticated in terms of trying to utilize put options or trying to short stocks or equities or futures. You just simply buy a long inverse ETF. And in this case, there's ultra and sometimes there's triple ultra. So this will go up 2% for every 1% the Russell 2000 drops. Okay, so it's inverse and it's ultra, so it's going to be leveraged towards the opposite direction of the Russell 2000. So these are some easy ways to be able to either hedge a portfolio that you may have, or to be able to anticipate the trend lower utilizing some of these ultra ETFs. If you don't have full access to the site, sign up below with the link that we've got provided for you there, and have a great day today.